Good morning. It's Friday, the 24th of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. Our top stories and themes for Friday, that's today. Markets hit all-time highs on Thursday as confidence returns once again. How will domestic institutional investors play these peaks? Indigo's results reflect growth in one of the world's hottest aviation markets, that's India. 7,000 IIT students are without placement jobs. Why is this number rising? And 72 matches later, the IPL season is set to end on Sunday with the finals.
This is a call report with Govindraj Ethiraj.
The markets are on record high mode again. So we are back in record high mode with the markets having regained full confidence that the government in power will return to power when the votes are counted in India's 5-year general elections on the 4th of June. The jitteriness that hit the markets in previous weeks appears to have receded, and in retrospect, it was a good opportunity for traders to have used those downs and ups. Of course, all of this is in perfect hindsight. On Thursday, India rejoined world markets and hitting record highs, with the BSE Sensex touching a lifetime high of 75,460 intraday before closing at 75,418, up 1,197 points, with the Nifty 50, on the other hand, coming close to that 23,000 mark after hitting a record of 22,989 and ending 370 points up at 22,968. So the broader markets were strong as well, touching lifetime highs there too, with the BSE Mid-Cap Index hitting a new high of 43,442 and the BSE Small-Cap Index touching a new lifetime high of 48,229. So the spikes were driven by financial stocks for one, and one key trigger overnight was the massive dividend that the Reserve Bank of India, about 210,000 crores, that it will pass on to the government, which in turn was seen to be improving the macros like India's fiscal deficit, and also boosting further government spend in infrastructure and related areas, which sent stocks, including in the public sector, soaring up again. More on public sector stocks shortly. For the Sensex and Nifty, these were the best days since March 1st, when faster than expected economic growth data drove markets to record highs, according to Reuters. This was also the sixth straight session indices rose, and being the longest winning run since early December. There's an interesting circular effect happening wherein government spend or increased prospects of it are leading to bigger gains for public sector stocks and units, basis the belief that they will get more business or place more orders on other public sector units. The Business Standard points out, for example, that stock prices of BML have been rising steadily, including hitting new highs earlier this week and surging 25% in just 4 days. Now, this came after the company announced last week that it had bagged an order worth 250 crore rupees from Northern Coalfields Limited, another public sector company, for dump trucks. Now, there are several other such examples, but in the last 6 months, the market price of BML has more than doubled or zoomed 107%. So this is perfectly normal business at one level, but if you see the links or the linkages between public sector stocks, there is a positive domino effect of sorts, which I guess one needs to watch a little carefully. How will institutional investors now behave? So this brings me to my question for the day. Valuations are undoubtedly high, so how are institutional investors or brokers looking at the latest rise? The related question in a way is that Indian institutional investors are buying consistently, thanks in turn to retail investors who are pouring in money through monthly plans into mutual funds. And yet, institutional investors must also keep taking money off the table, so to speak, whether they're domestic or international. And international, as you know, of course, have been consistently selling in the last few months. I put this question in the context of overall valuations and outlook to Sanjeev Hota, Vice President Research at Sharekhan. And I began by asking him how he was tracking the trends.
Market today, we have seen the Nifty and the mid-cap indices that touched new high. I think mostly that has been driven by the lowering of the uncertainties and the anxiety of the outcome of the general election. And now the market is expecting post this fifth phase of the poll. I think market now is expecting that political stability and the policy continuity to continue after the election outcome. And that is what I think driven the sentiment, and the market is that new high. And investors are buying both the quality stock in the large and mid caps. So I think that is the reason why the market had touched new high after a kind of volatility that we have seen in the recent week. Beyond this anxiety or the uncertainties about the election outcome, I think yesterday this sentiment is also boosted by the Reserve Bank of India announced a record 2 lakh crore dividend to the center for FY24. This been has taken at a very, very positive for the economy. And I think that will help the government to meet the fiscal deficit target for FY25. And also it's a positive for the lowering the bond yield. And potentially it will also add to the sovereign rating upgrade. And all these things will be like positive for the market.
This is the good news, and valuations are increasingly appearing to be a concern at this point, not maybe across the board, but definitely in some stocks. How are you seeing it?
Valuation is the two part of it. Firstly, on the Nifty, if you see it's trading at almost 20 times FY25 and almost 18 times FY26, and it's closer to the long-term averages. So I don't really see any major issue in terms of valuation for the large caps company. But having said that, definitely some part of the mid cap and more so in the small and micro cap where the growth has already built up. So that is where the problem lies in terms of the valuation. But having said that, we need to be very, very selective and we need to pick the companies, the mid cap and small cap also, where I believe that earnings are not going to grow at a linear space, that they are going to grow at a multiplying space. So that is where we need to pick. But we think we need to avoid where the growth is built up without any evidence of the earning curve.
So, what's a good example of that, Sanjeev? Like areas where you're seeing that kind of build up?
Maybe some part of the PSU, I think run-up is quite significant in the last 1 year, and that has been partly or mostly driven by the low float of the PSU. And I believe that is not being largely supported by the high earning growth expectation that is going to come for next 2 to 3 years. And I think that's the best example one can take for the growth that has been built up. And some part of the micro cap, I don't want to name it, but definitely there are micro caps where the bubble is built up.
So, if you were to look at the kinds of investors who are putting money into the market, so there are retail, there are institutional, domestic institutional, foreign institutional. And when I say retail, again, there could be people who are buying stocks directly on cash, and there could be those who are playing via derivatives. So, who do you think is, let's say, driving the market at this point the most? Number one. And number two, do you see that being consistent? And could that change if there is, for instance, there's suddenly some fear attack?
Definitely, if you see our market, it's mostly driven by this domestic institution. FI's behavior was quite erratic in the last 1.5 year. So FIs are missing from the Indian market. So main factor or the main player which is driving this market is the DIs and with well supported by the retail flows that is happening via SIP. We are already crossed 20,000 per month. So that is what driving the market. But having said that, I believe FIs are also, if you see a decadal low in terms of their percentage holding of the market cap, it's almost like 16% now. And the kind of opportunity India is going to be offering currently also and going forward, the political stability or the corporate earning growth plus this macro print which are improving. So I believe that FI is also going to come back significantly going forward, but currently, definitely the domestic institution as supported by the retail.
I know that there may not be a very clear historical precedence for this, but how are you seeing the consistency in these flows, both in retail as particularly retail institutional, which is via mutual funds?
So if you see in the last decade, we are talking about the FIs, when the FI keep on pouring money in the market usually goes up. But that trend has really changed in the last 4 or 5 years. Our retail investor has now become more smarter than what they are 5 6 years back. And that is the reason why we are seeing despite the fact that the FIs are missing from the market and they are consistently taking out the money, but we are touching new high. And because there's a larger flows from the retail coming through the SIP route. And I think the behavior has entirely changed from what it was 10 years back and what it is now, I think. And that is going to continue because India is the only, I think, sweet spot in the across emerging or the developed market where there's the earnings supported by the domestic economy, domestic cyclical. If you see any other emerging market that has been largely supported by the export economy, export markets. So I think this is going to continue for quite some time.
Right. So for example, the FIIs are also taking out money because there is money on the table because the markets have run up so much and all good investors keep taking money off the table. Isn't it possible that that should also, or shouldn't Indian investors also be thinking like that, particularly institutional?
See, the India is going through a decadal kind of opportunity, and we are now looking at touching India $10 trillion kind of GDP next 7 8 years. Maybe we can debate on that. We can maybe agree or disagree on that, but maybe 2 years, 3 years. But we are definitely inching towards.
Anyway, it's a growth economy, so that's a given. Yeah.
Yeah, so that's, and we usually, if you see historically, the market cap to GDP is usually 80% to 100%. So definitely, market cap is going to touch $10 trillion once the $10 trillion economy is going to take place. And before that, also now currently our market cap is much higher than what the GDP of our country. So definitely, we are going to touch much earlier than the GDP target of $10 trillion. So having this kind of numbers, so definitely the long-term structural picture is there. So I don't see any reason why the flows from the domestic institution and the retail is not going to continue for next 4 5 years.
Sanjeev, my question is actually no. I think the flows are obviously a given at this point. My question is, wouldn't domestic institutional investors also be wanting to take out some profits? I mean, isn't that their job to do so in order to reward their investors?
Yeah, so that is happening. If you see from the start of this year, there are higher allocation or exposure increasing towards the large caps. Okay, and what it was a year back. So definitely the strategy where it is allowed, like multi-cap mutual funds. So definitely there is more flows going through in the last 1 month. I think March, there was the outflow from the small cap fund and the larger flows were into the large cap fund. So that kind of sector rotation or the market cap
Switching is going on. Yeah.
is taking place, and that is the quite thing rational. If you look at some of the small and mid cap companies has risen astronomical. They need to book profit, and it is happening.
So, what's your outlook? I mean, we've obviously June 4th is the day everyone is waiting for. Even at this point, the markets have already priced in victory for the BJP government. What happens after this?
So, if market was not nervous or there was no anxiety, I was worried. I must be worried if there was no anxiety or nervousness in the market. But good thing is that market was nervous, and currently also some state, whether it's a BJP or it's not going to be a BJP. So that kind of anxiety really helped the market to be a much larger, I think, upside going forward. But having said that, I don't really build into what the June 4th outcome is. We have seen what happened in the year 2004, where everybody was expecting the BJP to continue, and that didn't happen. So knee-jerk reaction can come, but as I said earlier, the structural story is in place. And I think if there is maybe, and I don't really think that to happen, the jerky reaction, because BJP is going to come back, and that is going to continue. The structural growth story in the place, and I think volatility should be used by the investor to buy into the quality names.
Right. So focus on the structural growth story rather than the political outcomes. Sanjeev, thank you so much for joining me.
Thank you.
So back in global markets, everyone was watching out for chipmaker Nvidia's results and were not disappointed. Second quarter revenue for Nvidia would be about $28 billion, the company said. That's looking ahead, topping the $27 billion roughly predicted by analysts. Nvidia's first quarter results also beat projections thanks to its data center division, which grew 400%. So everything is looking good for now on the AI chip front, and by extension in the tech stock front, which I guess is good not only for tech stocks or for Wall Street, but also the rest of the global markets. High gold prices are slowing down purchases. Meanwhile, record gold prices have slowed down purchases by countries like China, whose buying was sending up the prices to start with. Interestingly, in China, both the government and retail buyers were purchasing gold, though for different reasons. Overseas purchases of physical gold that's in China fell to 136 tons in April, a 30% decline from the previous month and the lowest total for the year, according to latest customs data, said Bloomberg. So in India too, the Reserve Bank has been buying gold, even as, like China, it's been trying to reduce its dollar holdings and create a geopolitical hedge. Now, reports say that the Reserve Bank added almost 24 tons of gold to its stock of reserves in just 4 months, from January to April this year, more than all of 2023, which was 16 tons. So all these spikes are also evident in the gold import data or the overall import data. Now, the Reserve Bank is currently holding about 828 tons worth of gold as part of its foreign exchange reserves as of April end. which was up from 803 tons as of the end of December last year. Now, China, in contrast, is currently holding over 2,200 tons, while the United States, just to put everything in contrast, has over 8,000 tons of gold. Elsewhere, oil is still holding near its lowest closing level in 3 months as traders were matching off rising US crude stockpiles, which we've talked about in the past, and signs that the Federal Reserve may hold interest rates higher for longer. Brent futures were steady around $82 a barrel in London, and crude prices have now retreated about 11% from this year's peak, even as global demand powers to a new annual record amidst plentiful supplies from the Americas, according to Bloomberg. So America is counterbalancing the OPEC nations, and everyone is now looking out for and at the OPEC Plus, that's the Organization of Petroleum Exporting Countries Plus alliance of producers led by Saudi Arabia and Russia, who may prolong current output curbs, which they had instituted earlier, into the second half of the year when they meet next month. Indigo's results reflect strong aviation growth in India. India is one of the world's hottest aviation markets right now, and Indigo's quarterly results reflect this sentiment. Before I come to Indigo, remember that some of the largest capital expenditure in India is happening actually by the airline companies, which is Indigo and Air India, which is, of course, running into hundreds of billions of dollars. Indigo parent Interglobe Aviation ferried some 26 million passengers, which was up 14% in the last quarter, and the company saw a 106% year-on-year growth in consolidated net profits to about 1,900 crores, and that's all for the fourth quarter. Revenue increased 26% to about 17,800 crores. Passenger ticket revenues were up 25% to about 15,000 crore, while ancillary revenues jumped about 20% to about 1,700 crores. Fuel costs per seat kilometer were down about 7%, though non-fuel costs were up 14%. Indigo now has a fleet of 367 aircraft and is sitting on a total cash balance of 34,700 crore rupees. So everything's looking good for Indigo, but maybe not so good for Air India and Vistara, the results of which are not so public because they're not listed, but something that we would be tracking closely in coming days. IIT students are without placement jobs. Between technology shifts, including artificial intelligence and economic factors, jobs for India's best or most sought-after engineering students seem to be slowing down. Some 7,000 students from the Indian Institutes of Technology spread across 23 campuses now remain unplaced, says a Times of India report based on a right to information application filed by an alumnus of IIT Kanpur. IIT Delhi has apparently reached out to its alumni network seeking help to place the current batch of students. Approximately 400 students at IIT Delhi are still without jobs. Similarly, and this is not IIT, the Birla Institute of Technology and Science, or BITS, and IIT Bombay have also approached their alumni for support, and BITS initiated contact with its alumni 2 months ago. At IIT Bombay, about 10% of the graduating class, or 250 candidates, are yet to secure placements, according to that report. The Group Vice Chancellor at BITS attributed the decline in placements to broader economic and technological factors, saying that everywhere placements were 20 to 30% lower. And if some student is saying all students have been placed, the quality of jobs leaves much to be desired, he says. There are unplaced students every year, of course, though apparently the number 2 years ago for IIT students was about half of what it is right now. IPL finals are coming up as the season is ending, and the big takeaways. IPL 2024, accompanied this year by scorching heat and performances, is ending this week. 10 teams participated in 72 matches so far, with 2 more to go. And the saga this year started on the 22nd of March and will end on 26th May, or Sunday. Chennai hosted the opening ceremony and will also host the finals. And for more on the tournament this year, takeaways so far, highlights in individual and team performances, I reached out to Ayaz Memon, veteran cricket and sports journalist, and I began by asking him what he took away from the tournament so far and, more importantly, what he was watching out for at the finals.
It's been hot and scorching, Govind, as you mentioned, and not just because of the absolutely excruciating summer that we are experiencing. It's also been hot and scorching on the field of play. The number of scores that have kind of hit another stratosphere. The number of boundaries and sixes and scores of 200 plus just proliferating. It was unthinkable. If you look back to even 10 years back in the IPL, if a team scored 200, the team was more or less assured of a win. But now in this season, what we've come to kind of accept is that, if a team makes 200, the likelihood of winning has diminished to less than 50% because other teams will probably score that in 17, 18, 19 overs. So I think that's been the big talking point, the really massive scores that have been run up by teams. Apart, of course, from the form of players, especially the Indian players like Virat Kohli, Rohit Sharma, Hardik Pandya, Jasprit Bumrah, good and bad. And that's because immediately after the IPL is going to be the T20 World Cup. So the form of these players, as also if you're interested in the other teams, the form of players like Mitchell Starc and Pat Cummins and some of the Australians, the Englishmen, was also of interest. So, but by and large, one can say there's been a really successful season once again. There have been massive crowds at all the venues. It just reestablishes or reiterates that the IPL, there's no bigger attraction than the IPL when it comes to entertainment come sport in India.
Right. And when you say that, we've seen such big scorings and big hits. So what's changed? I mean, are players becoming more comfortable or just bolder?
Well, it's a combination of things. Bolder, certainly. Players more comfortable in the sense that, there is no question of not showing intent now. You can't play yourself in. You have to go there and start bang, bang. It's a slam bang format, as we know. So several factors have come into play. Notably, the pitches have been very flat, which means very heavily loaded in favor of batsmen. The boundaries, as we know in the IPL, they're drawn in. They are not 75-yard boundaries, as is the convention in cricket. These are about 65, 66, sometimes even 61, 62. So, and with the bats having improved so much, even a missed hit can go for a six, which is working to the disadvantage of the bowlers. And then there was the impact substitute rule, which was introduced this season, which meant that you could call in a batsman. You could have a batsman sitting as a substitute in the dugout, and you can call him in at number 8 or 9. And that specialist batsman towards the, in the end overs would give you that surge, which would take the score, sometimes even way beyond 200. So apart from the fact that players have got fitter and stronger, that now is a given in sport. You have to keep getting better every year. But these are some of the other factors, the pitches, the fast outfield, the shorter boundaries, and then, of course, impact rule.
Right. And before we come to the qualifiers and the finals, what are the things from a team perspective that stood out for you in this season, Ayaz?
I think getting the balance right of the team was key, was crucial, and has been proved now. I mean, the team which is already in the final is Kolkata Knight Riders, and they've got a terrific balance between batsmen and bowlers. So too, Rajasthan Royals, who have to still play Sunrisers Hyderabad, that's the second qualifier, where Rajasthan also, in my opinion, actually on paper, they seem to have the best balanced team. And, some fine fast bowlers, very good spinners, a string of young, exciting batsmen, largely Indian. So, and these two teams, they bucked the trend. Their spinners have done well, as have their fast bowlers. So it shows that if you've got the right kind of players, of the right attributes, you can actually do well even on pitches which are otherwise loaded in favor of batsmen. That imbalance kind of gets a little neutralized if your team balance and composition is right. So the exception, of course, is Sunrisers Hyderabad, who the Rajasthan Royals will play in the qualifier to see who plays KKR in the final. Now, they have relied largely on their power hitters, Travis Head, Abhishek Sharma, Heinrich Klaassen. Their bowling attack isn't as formidable. Their spin quotient is, in fact, quite weak. They've got some good fast bowlers, Pat Cummins, T. Natarajan, and so on. But they've more or less made it this far on the strength of their absolutely fantastic batting and power hitting. So that's really been to just summarize the teams that have reached the playoffs. Because RCB reached the playoffs, but lost out there. They had a great second half, great momentum, winning 6 matches on the trot to reach the playoffs, but then they went kaput in the playoffs.
One surprise, one disappointment from the matches so far, either individual or team, and who are you rooting for the finals?
So I think the big disappointments were Chennai and Mumbai both getting knocked out. These teams have won 5 times each. And again, to just kind of get back to what I said earlier, they just didn't seem to have the right combo going or too many key players out of forms. Especially that was true of Mumbai Indians. I mean, Chennai Super Kings suffered because of the absence of some players, but even so, you expect CSK, that's been their culture. They just kind of fight the odds and come up trumps. It didn't happen this year. Mumbai Indians is really the team which suffered, really just had a disastrous season. as a team, collectively, and also were key players, especially Captain Hardik Pandya is a premier all-rounder for the team as India gets into the T20 World Cup, but he's woefully short of form as a batsman as well as a bowler. And that's really a troubling aspect for the Indian team, which now flies to the US in another 4, 5, 6 days' time. And then Rohit Sharma, not really at his best. Some of the others, Ishan Kishan, I think from Mumbai Indians, the guy who stood out for me was Jasprit Bumrah. Just bowled so brilliantly and reaffirmed, in my opinion, that he's the number one bowler in the world today. KKR is already in the final, and if Rajasthan Royals gets to the final, I think it has all the importance of a classic contest because the strengths of both teams are similar in a sense, and yet dazzlingly so. But listen, this is T20. Don't discount Sunrisers Hyderabad. They've come this far because they've been so good. So I won't discount them, but they lack a little bit. The edge in bowling does not really inspire, in my opinion, so much hope as I would say as it does with KKR and Rajasthan Royals.
Ayaz, thank you so much for joining me.
Thanks, Govind. Cheers.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.